So today we're going to talk about what is a Black Swan event. We're going to talk about some examples of this and how can you protect yourself and your portfolio from such an event. So let's get started. Okay, let's first of all talk about what is a so-called Black Swan event. You might have heard about this, you might be afraid of it, or you might have seen that on this channel there are some comments where people say, Markus, what do you do in the case of a Black Swan event? So let's first talk about the definition and what a Black Swan event is. First of all, it is an outlier. So it means that it is an event that has never happened before and will probably never ever happen again. So it has to be an outlier. What is the second thing that qualifies a Black Swan event? Well, it has an extreme impact, right? I mean, usually on the economy and financial markets. So this is the second criteria of a Black Swan event. And the third one is that a Black Swan event is only explainable after the fact. So because it is something that has never happened before and will probably never happen again, it is something that nobody could predict. So let's talk about some examples. So what are examples of this Black Swan event? Well, in order to do this, let's actually talk about how this all came about. So there is this gentleman, Nassim Nicholas Taleb, and he wrote a book on the Black Swan and the impact of the highly improbable. And in his book, he used the following examples as Black Swan events. So one example would be World War I. So he says, wasn't predictable, nobody knew it, and probably could never happen again, well, until World War II. Anyhow, another Black Swan event where he says that changed the world had an extreme impact on the economy and the financial markets. And again, it does not only have to be negative, it can be positive. And this is where he says the internet was another Black Swan event. Number three, another example that we're probably all familiar with are the 9/11 terrorist attacks, right? I mean, the 9/11 terrorist attack, this is something that nobody could predict and that hopefully will never, ever happen again. Now, here is the interesting fact. Again, we're talking about this book that was published by Mr. Taleb here on April 17, 2007, right before the financial crisis. So, naturally, the financial crisis was added to the list. And, you see, the author could say, see, I told you though. Now, Mr. Taleb, the author, warned that the Black Swan event, or Black Swan events in general, are impossible to predict due to their extreme rarity. Again, they have to be an outlier, yet they can have catastrophic consequences. And therefore, Mr. Taleb says, it is important for people to always assume that a Black Swan event is a possibility, whatever it might be, and try to plan accordingly. And so what does this mean? Well, I actually think this is a new version, a much more educated and smarter version about the sky is falling and Chicken Little. Okay, in all seriousness here, so why should you care about a Black Swan event? Well, you see, since I'm a trader, people ask me all the time, how do you protect yourself from a Black Swan event? Or what do you do in case of a Black Swan event? And this is exactly what we are going to talk about right now. And I want to mention, first of all, two important things. Number one, there is a huge difference between a trader like me and an investor. An investor is just buying and holding. As a trader, I watch the markets every day and I always have a stop loss in the market. Now, the second important thing is a Black Swan event is not a one-day event. Now, I want to take a look at two very specific examples here. I want to look at the 9/11 terrorist attack because this was really coming out of the blue, right? And I also want to look at the coronavirus crisis, right? Because this is also classified as a Black Swan event. But let's talk about 9/11 first. So I actually brought up a chart here of 9/11. This is the S&P 500. And on this particular day, you see where we have the blip here because markets were halted. This was September 11, 2001. Now, a few things that you might already notice here. First of all, the markets were already in a downtrend. Since June, the markets were going down. And you know me, I like to look at indicators, right? Because indicators give you pretty early warning signs. And these indicators that I like to use are RSI, MACD, and stochastics. And as you can see, they were already telling me that the market is more likely to go down. Now, does this mean that I could have predicted September 11th? Absolutely not. This is not the claim that I'm making, but I'm telling you that as a trader at this point, you would have already positioned short, meaning that you would try to take advantage of a falling market here. And this important thing, if you don't know yet how to trade a falling market and how to make money in a falling market, I did a video on this. I'll link to it in the description. Anyhow, so this is what happened. And then, yes, of course, for a few days, the markets were going down. But as you can see, the markets recovered a month after. So on October 11th, the markets were already there where we were on September 11th. So even though it was a Black Swan event, as a trader, it would not have hit you that hard. Now, let's talk about the second event here. Let's talk about the coronavirus. So as you know, this here is the S&P 500 in 2020. 2020 starts here, as you can see, and then we had the crisis coming towards end of February, and then between end of February and end of March, the markets dropped substantially, as you can see. But you see, there were also warning signs. And this is where I can actually say, you know what? I did tell you. Because on February 11th, right here, I released a video. Here's proof. February 11th, 2020, where I said, is it possible that the stock market could crash because of the coronavirus? And I said, absolutely, this is a possibility. So, I mean, the Black Swan event that we have was not real. I mean, did I know that that we would go to what point we are going down? Of course not. But that there is a very, very strong likelihood. You see, 1, 2, 3, 4, 5, 6, 7 days, 7 days before the crash happened, I already said, you know what? This is what I can happen. But anyhow, I'm not here to toot my own horn. How do you protect your portfolio? And this is where it is important. You see, Black Swan events might be horrible for investors. What do I mean by investor? A buy and hold investor. But usually they're not horrible for traders. Because as a trader, you're more agile. You see, as an investor, you're like the Titanic. You see the iceberg and there's nothing you can do. You're going to hit the iceberg. As a trader like me and like you are probably, right? We are more nimble. We are like a little speedboat that is cruising around the Titanic here. In fact, if you have been following me here on YouTube, then you know that I have almost doubled an account in something like 6 or 8 weeks during the Black Swan event. So because traders like you and I know how to read the early warning signals and can take advantage of it. Okay, let me just ask you this. Is this helpful at all? Are you enjoying this video? Because I really enjoy making these videos. And if you enjoyed the video, do me a favor and click on like, because this way more people will see it. And if you're new to this channel and want to see more videos like this, click on subscribe and also hit the little bell, because this way you get notified whenever I release a new video. And also, as always, feel free to share this video on Facebook, on Twitter, on Reddit, or by email, and I will see you in the next video.